Hi traders, this is Blake Morrow. You were listening to the Morning Edge webinar. Hope everybody's having a great trading session and happy. Is today Wednesday? Today is Wednesday. We're halfway through the week already. A couple of days to my son's 12th birthday. We have the tally is 18 people coming to my house on Friday.
Hey Blake.
Yeah.
Hey, I just tweeted out that story to you on the Australian dollar.
Dude, I'm talking about my kid, man. I don't really care about what you're tweeting right now. No, I'm just kidding. You tweeted out an article on.
I just tweeted out the story to you. Australia blocked a $10 billion sale of the country's biggest energy grid to Chinese bidder, and the Chinese Ministry of Finance says that it's ultimately end up being less investment in Australia now. They said that they consider it a protectionist move. Obviously, China's big in Australia, so that now explains why, out of the blue, a couple of hours ago, the Australian dollar got whacked for about 45 pips.
Got it. Thank you very much.
Sure.
I'll read that article. Actually, I wanted to read that a little bit later too. Thanks, Paul. All right. Let's see. Back to what I was saying. Oh yeah, it's my son's birthday. He turns 12 in a couple of days. But anyway, where has the time gone? Jay says. Jay, you remember meeting my son? Oh, last time you met him, he was probably around 5 years old, somewhere in that neighborhood. So yes, last time you saw him. Anyway, it's gone, and it goes so quick. I'm telling you. All right, guys. Now. Just FYI, last night during the news, and I'll just start off with the Kiwi because I'll analyze it right now. Last night the New Zealand jobs report came out. The Kiwi was inching its way up ahead of the New Zealand jobs report. You'll see it right here. It was spiking up. We were in the 7270s. We spiked up to 72.85 or so, and it started to spike up, and I'm like, man, somebody knows about this New Zealand jobs report, and I tweeted about it. I'm like, yeah, it's moving up ahead of the jobs report. It's leaked, and it spiked up to right after we spiked up to 73.20 bid. And I turned around and shorted it at 73.16, and which was nice because I put in a limit overnight at 73.30. I got tripped. My limit order got tripped. It went a little further. It's obviously it's a few pips higher now than when it was at that time. But yeah, I knew we were right up into resistance there, and as Paul pointed out, this is the time of year where you have to really be aware of the prices you're dealing with, and stick to them regardless of what the news is. And I know there's things, events, and comments that will move the market aggressively, but you've got to be able to kind of fade that stuff because there's just not a lot of liquidity out there. So these algorithms will push in low liquidity. They'll push currencies and stocks and and any instrument really up to key levels. Try to push some stops to trigger and then reverse. And that was pretty much the key. The situation with the Kiwi. No, I'm not short the Kiwi anymore, just so you know. I closed it out already, but as you can see, it's some very critical resistance, which actually is really important now, because if you look at what support is, I'm going to say support. Well, we already knew this from yesterday, but I'll write this down again. And I say we knew this from yesterday because if you weren't on with me on the Lunch Money webinar, we made our own bias chart yesterday. So we came back in and redid it because I wanted to look at all the majors. So we noted that 73 cents and 72 cents for the Kiwi, that's the range. And guess what? It is the range right now. And I'm going to tell you, as far as the the Kiwi goes, if we break 72 cents, there's going to be hell to pay because anybody who's long the Kiwi from last night, I'm going to write down 73.20. Anybody who's long the Kiwi from last night, they're thinking they're like, oh shit, how'd I get stuck there? Oh man. And they're like, okay, well, if it breaks below 72 cents, I have to get out. If they got caught on the long side over here, their stops are somewhere down here, somewhere down in this area. Okay. Now, if you look longer term in the Kiwi, I mean, we're just channeling up into the resistance. I'd be game for shorting anything up to 74 cents now, personally. Now I don't know if we'll get that opportunity. Maybe today after the FOMC minutes, maybe the Fed is so dovish, everybody starts looking at, they're not even going to raise rates until 2018. Who knows? But if we rally to 74 cents, I'm a seller. Now, I'm not. That's like not today necessarily. That's like I'm talking the next few days. But 72 cents is support. 73.20 is going to be resistance, and I think that's how you have to play the Kiwi right now. You have to play it below 72 cents. Opens up here. I'll just draw it out for you guys. It opens up a move to down back into the range, obviously, and a break above the highs would take us to 74 cents, which I would be a seller up there. So if I can just draw it out for you, that's how I see it. Now, what does that mean about where we're currently at? I'll tell you what it means. There's nothing to do right now in the Kiwi. So you could be long or short the Kiwi, but I don't think there's anything to do with the Kiwi right now. Sell it up here, buy it down here, or short it up here, or short it below here. That's it. Four options. What do you do with it right now? Stick your finger in your butt. I mean, sit on your hands and don't go hitchhiking. I mean, well, you know what I mean. Anyway, let's see. Oh, let's start with the euro. Okay, so the euro dollar. You guys thought I was funny, didn't you? See, look, Funny Blake is back. Funny Blake is back. Funny Blake, after not getting a lot of sleep the night before last. So yeah, Funny Blake is back. Aren't you guys happy? Okay, let's take a look at the euro. Now, the euro, I want to stop here for a moment. Let's keep that. Let's remove this. Let's remove this. Okay. Now, somebody asked me yesterday, hey Blake, are we bullish to the euro now? It's like, no. If you look at our trend lines here, we are still below the trend line. Remember, a couple weeks ago we're like, okay, if it stays below 112, 112.50, it's bearish. Well, remember this yellow trend line, it's an ascending trend line, right? Ascending, meaning it goes higher. That, so fast forward a couple weeks later, and that ascending trend line is now really at like 113. Yesterday we spiked. It's not uncommon. It's summertime. You get a stupid comment from a Fed governor, and it spikes us up, and then we get another stupid comment from another Fed governor taking the exact opposite position, and it reverses. Okay, so that left us with a long wick. The fact of the matter is, we could not hold above this trend line, and so while we're below 113, and I'll just say 113.20, I could actually, since it's summertime, I can actually just put us in a range. Okay, but I'll tell you guys, if we get another spike up above 113 and we fail today, I'm going to short the euro because it's manageable risk. Again, it's all about risk reward here. It's all about risk reward. What's my risk versus what's my reward? Throw fundamentals kind of out the door right now. It's the middle of August. We've got arguably 3 more weeks of this crap. I say 3 more weeks because it's, really you got to get past the Labor Day weekend. Labor Day in the United States, the first week in September. You really got to get past that. Once we get past that, then the liquidity comes back. But right now, you just got to be more technical and patient. Okay. Now, what is going to put downside pressure back on the euro is going to be a break back below here, this 112.30, because anybody who's long from the last couple of days, they're like, okay, look, I bought the euro on the spike. We're holding the breakout point. That's fine. I'll stay with it. But if we break back below that breakout point, I have to get out. Again, if you got stuck in the euro long yesterday, that's probably what you're thinking. I'm assuming there are some of you right now that are long the euro thinking the exact same thing. Okay, I got long the euro at 113 yesterday on the spike up. It looked bullish. I'm going to hang on to it, and we just can't get back below here. Yeah, I'm sure everybody's thinking that, right? So if you get back below 112.30, that's where it starts to get a little dicey for longs. All right? Okay. Eric said, hey, Blake, who's saying for GNR? Did Duff give you any financial advice? No. But Axl Rose sang, and he was freaking phenomenal. Phenomenal, by the way. 3 hours straight, just so you guys know. Axl Rose, littered with a lifetime of drug issues, probably. I think he's been sober for the last couple of years. Him and Slash. I mean, Slash almost had a near-death experience. I think they've all been relatively sober for the last couple of years. He jammed for 3 hours, and he had his swagger. His little shimmy shake that he does. Axl Rose, the shimmy. How he, his head weaving and bobbing. Dude, what a showman. It was a great concert. I'm so excited I got to go because, I don't know if they're going to ever tour again at their ages, but he's 54 years old and he rocked. It was great. Man, it was awesome. I'm so happy I got to go. Although I got home at 2:30 in the morning, and that means I was up for like almost 24 hours straight. But that was a very, very great experience. Okay, here's the cable. Just so you guys know, I bought some cable. I plan on getting out here. I might actually get out here in the next 15, 20 minutes, but I bought some pound at basically 130.05, and I'm up like 10 pips. I just bought it at the 38% retracement. Okay, I'm thinking we might be flagging, but I'm short the Aussie, and that's my dollar exposure I'm going to hold through the FOMC minutes. I just picked up the pound because I bought the pound Aussie, I bought the pound New Zealand yesterday. I'm still short the euro pound, so I bought the pound Aussie and pound New Zealand, small positions, but I'm up like 100 pips, 100 plus pips in both, and I'm sitting in those. And I just bought some pound dollar just a few minutes ago, and this is a flag, and possible flag. I'm not going to say it is a flag. I mean, if we have a dovish FOMC minutes, this pound could break higher. Now we had the UK employment come out. The claimant count change came in line. A little better than expected, actually. A little better than expected. It was the average hourly earnings that really sank the cable. So, the pound came back under pressure. But I think as long as we're above 129.90, then we have 130.70, 129.90, 130.70. Okay, it's bearish but I'm trading counter trend right now. You guys know it's bearish while we're below 135. I know I'm not going to waver on that. Just so you know, I'm not wavering on that bearish stance until we get back above 135. If you guys don't know why, it's because if you look at a monthly basis, we're sitting below support. We may have bounces, and we may actually, you know what? I'll take that back. No. We're going to keep it bearish. It may bounce back to 133, 134. Okay, and look, I'm long the cable. Just so you all know, I bought the pound dollar. I'm short the euro pound. I'm long pound Aussie, pound New Zealand. I'm long cable right now. I know we're in a bearish trend. I'm also very well aware if we break above 135, we're going to be in a big range, but we're also going to see a big pound squeeze. I'm trading counter trend, and I'm aware of it. Is it okay to trade counter trend? Absolutely. But when you're trading counter trend, you got to know I'm not loading the boat. If that makes sense. All right. You know, I trade counter trend all the time. But when I trade counter trend, I just take smaller positions. It's pretty simple. Okay. All right. Let's go to the Swissy. No, I'm not long the Swissy. Yes, I got out of it the other day. That's the one thing that, you know, hit me yesterday, is actually getting stopped out of the Swissy. That hurt. You know, I was like, whoop. I'm like, damn it. Anyway, we closed above this trend line. So that means that this low from yesterday is extremely important. This low right here is mega important for bulls. 95.90. 95.90. Extremely important for bulls. Now you can say, well, you know, the FOMC minutes are going to be bullish. I'm gonna get long. It's fine if you get long the dollar Swiss, so be it. I would put my stops below there. I don't think you want to risk much more than that, in my opinion. The reason why I say that is because there's a couple of things. The market's looking a little risk averse, meaning, you know, market's looking a little nervous here. If the market turns risk off, I mean, we could actually see some Swiss strength too. So don't think it's all, it's all rainbows and unicorns for the dollar right now, because it's not on the dollar Swiss. All right, any rally towards 97 cents, I think traders are going to look to sell, because then there's people like me that got stopped out, that were long, that didn't get stopped out, that are probably like, okay, well, if we can just get back to 97 cents, I'm a seller. You know, if you're long over here, you're probably going, okay, if we can just get back up here, I'll be happy with that. That'll be 97.10. Okay, we're in range. Let's go over to the dollar yen. So the dollar yen, yesterday, as I pointed out, this looks like it created a false breakdown. Now, see this support? I'm not sure where it is. I'm just throwing darts here at this point. And I don't know what to do with the yen, and I have no yen exposure. All I know is if the market does show a little risk off, this thing could come down again. I can honestly tell you guys, I'm not comfortable trading the yen at all right now. Now, I guess a break above 101.20 will create a little bit of a squeeze. Support's got to be down at 100. I mean, anybody who got caught short down here is probably going to be happy if we get down to 100 again. And it's a round number. Okay. It is still in a bearish trend until we break above this yellow trend line. It is in a bearish trend. Okay. All right. Let me grab a drink of my coffee really quick. Ah, coffee, good. Okay. All right. Let's go back, or dollar yen, Swiss. Let's go into the Canadian. I'll do that really fast. All right, here's the Canadian. Now, here's the thing about the Canadian. Last night in my forex wrap, read right here. Dollar Canadian break of 129 was very bearish for the dollar Canadian, and 128 is support. This 129 dollar Canadian was a very bearish breakdown. It's obviously resistance because once it breaks through support, it is resistance. Um, it held overnight. Okay, this is. I want to here. Let's get rid of this. We don't need this. We don't need this. We don't need that. Okay, we need this. Now, the dollar Canadian looks bearish. All right, I'm going to go with that. It does. Looks bearish. But it is summertime. And I'll tell you, if we come back and we break through like yesterday's highs, which will be 29.30, whatever it is, right through here, this thing's going to start squeezing. Because anybody who's short doesn't want to see it back above that trend line. And like I said when Paul was here, I said, man, it's summer. Markets, got a hard on for just kind of screwing everybody in the summertime. Kind of how it works. I'll tell you, man, if we break above 129 and 129.30, it's going to start squeezing because it got everybody long the Canadian currency. We're short the dollar Canadian. And yeah, if we breaks above there, it's just going to go boop, Now, support for the Canadian. This is not easy. Probably right through here, I would suspect. 128.40. Okay, that should be some support. It is, for today, it is bearish. And while we're below this 129.30, it's bearish because what's happening here? What's happening here is this. You can look at it like that. You can look at it like that. However you want to look at it. It's just this is a pennant. Okay, it's bearish right now. That's good if you have long Canadian exposure. If you're short the dollar Canadian, I know Nigel in our chat room short the Aussie Canadian. Some of you are short the New Zealand Canadian. Whatever. If you're trading the Canadian to the short side, that's good. Or the long side, excuse me, the Canadian single currency to the long side, that's good. You don't want to see it back above there. If it does, you're going to see, because there's a lot of people that are long the Canadian right now, in my opinion. Lots. It's a pretty popular trade right now, being long the Canadian currency, because it looks like the right trade. But like I said, it's summer. Don't get too married. Be single. Date a little bit. Try to stay away from STDs, kids. Use protection. I'll be back in a few moments. Don't go anywhere. Alrighty, good morning, traders. This is Blake Morrow. You are listening to the Morning Edge webinar, and I want to welcome you all back. Um, okay, let's see. Hold on. Hold on one second. Sorry, I got. Sorry, guys. Let me see. Let's see. Time to get started again. Where am I at? I'm at the Aussie. Let's go over to the Aussie dollar. Okay, Aussie. Now I'm still short the Aussie dollar. I am going to hold short Aussie dollar through the FOMC meeting minutes. I don't know if that's necessarily a wise decision, but I'm going to. From a technical standpoint, I'm still very bearish. The Aussie, we just hit the 38% retracement though, so that's important. We should go a little should go further in my opinion, but we're seeing obviously a little bit of a bounce back in the Aussie right now. The 50% retracement is 75.90, 75.88. Okay, that'll be the 50% retracement. We're trying to create a little bit of a hammer here. We got some support right through there. This I want to say it's that spike low right there. Right here. So the lows 76.15. $76.15 looks to be the low. So I'm going to say that that is support for today. And let's see, resistance now for the Aussie. So you gotta imagine, like, the people that are on the long side, where are they worried? You know, where I mean, not worried. Where do they want out? You know, if you're long the Aussie right now, where are you looking to get out? Because this may cap us right where we're at, but you know, you might be able to squeeze a little bit more out of it. I mean, this is not great resistance, but I'll write down 70. The overnight high basically is, which is 77.10. Okay. Um, Matt asks, is that a double top in the Aussie? I mean, it could be. You know, we have these highs here. You know, and I don't. It's like, is that the neckline right where we're at right now? It's possible. If it is, that'd be great. Um, you know, I think if we breach new lows, then it is. You know, maybe that pushes us down towards 75 and a quarter, right? Okay, so 77.10 is resistance, and it is in a range. Now remember, and this is longer term. Okay, the Aussie. This is a triangle pattern. Also, some people see it as a shoulder, head, shoulder. It's a double-headed green monster, right? The double-headed green monster. That also is known as the Loch Ness Monster. Yep, I'm making stuff up right now as I go on the fly. But as long as you're below 7750, it's bearish. And like I've told you guys before, we break above 7750, I'm pretty much going to drop everything and buy the Aussie across the board. So just so you guys know, if we break above 7750, we get a good weekly close above that, I'll be long the Aussie against everything. I'll change my tune. All right. Anyway, yeah, possible double top, Matt, I think. Okay, where are we at? I got to hurry up because I got Steve Volge coming in here in a little bit. So we got the Aussie. Let's go to the dollar index. Here's the dollar index. Okay, so the dollar, we drew all this yesterday, by the way, if you weren't on the Lunch Money webinar. So we have trendline support that comes in at, so you got to think about this on a dovish FOMC minutes. We could very easily go boom, boom, oops, boom, okay, to 94, let's call it 94.35. Okay, that's trendline support. It's going to be big. Now, the flip side of that is if we break through these highs, which is 95.05, it's going to squeeze. It will squeeze, and it's not going to feel good because there's a lot of people that are short the dollar right now. So, all right, let's take a look at the peso. So the peso, Matt in our chat room, Jethro, I'm sorry, Jethro, it was Jethro. Jethro noticed that the 618 retracement was right here. It was at 1798. We did go as low as 1792, and then we created a hammer yesterday. So we're seeing a follow through. Now, one of the things that you might have missed, we sent it out even in my very tired state yesterday. We have this really strong downtrend line we had in the peso. We broke above, and it allowed for a squeeze. So that once we broke above 1805, that allowed for the squeeze. That's a 1,500 pip move. It was a nice move higher. Now, I'd say strong support now is any move back down to this 18, probably like 1998, which was that 618. Or if you want to be short, you wait for a move up there. I don't think there's a whole lot to do with the peso just yet. So you play it on the short side up here at 1828. So 1798, 1828, and you leave it like that. Let's see. Support is 1798. Sorry. 1728. Sorry about that. Range bound. Okay. Let's take a look at the Nordic currencies. So we have the US dollar, Norwegian krona. Now, this is a pretty big deal. Here, the Norwegian krona has been strong. But notice what we did. We came down to triangle support. Let's remove that for a moment. Triangle support, created a hammer. Now we have a false breakdown. And if you're short the US dollar, Norwegian krona, you're probably thinking, oh crap. If we got a false breakdown and a hammer, that means a break above 825 is going to squeeze the hell out of me if I'm on the short side. And that is, I think, pretty likely if we get a bullish dollar reaction following the the FOMC meeting minutes. Okay, and remember, fundamentals matter less right now because we're in summer trading. Right now, okay, right now in the summertime, the market is all about inducing a lot of pain. And if you just shorted the US dollar Norwegian krona down here thinking that it was breaking down, you might be in for some pain. All right. Um, we have to break down below 812 to make this bearish, because right now it's threatening a false breakdown. I'll tell you, I wouldn't want to be short the U.S. dollar Norwegian krona right now. Not based on how the Aussie and the Kiwi are acting. Dollar Canadian, you can almost throw in that same picture too. Okay. All right. Here's the Swedish krona. U.S. dollar Swedish krona. We have support coming in at 832, which is trendline support. This is another potential false breakdown. And if we get above 848, that is going to squeeze. Oh, Nelly. It's going to squeeze some shorts there. So 832, 848. Remember, if the dollar has a bullish reaction today, following if we have a bullish reaction today following the hold on really quick. I just sold my cable. If we have a bullish reaction today following the FOMC meeting minutes, there's a lot of potential moves. Like, I think the U.S. dollar Norwegian krona could squeeze. U.S. dollar Swedish krona can squeeze. The euro dollar can come down pretty good. You know, there's a lot of things that could happen today. So I think a lot of people are bearish the dollar right now, and they could get hurt. Okay, your bias chart's done. I had a question about the Aussie Canadian.